Well, on that note, let's invite our first guest of the morning on this festive Christmas morning. Mark Matthew of Bank Julius Baer joins us. Mark, good morning, and really grateful that you're taking time off on a holiday season to be with us. A very, very happy Christmas to you from all of us here.
Merry Christmas to you too. By the way, it is a work day here in Singapore.
Okay, it is a work day in India as well, and we work on Jan 1st as well. So I think we steal a march over the others. But to come back to markets, we continue to see the US exceptionalism playing out. Are you seeing that peaking any point that, the dollar doesn't rise anymore, US yields don't rise anymore, so money comes back to emerging markets anytime in the next quarter of 2025?
I can't really speak for the emerging markets, but I do think the US market is putting in a top, and there are three reasons for that. The first is that the market is expensive. It has only been this expensive two times before, the dot-com bubble and the pandemic stimulus bubble. The second thing is that the breadth of the market is narrow. Less than 40% of the S&P member companies are trading above their 50-day moving averages. And the last thing is that we saw in the Fed statement and summary of economic projections last week that inflation is a concern for them. If memory serves me right, the number of contributing, the number of the Fed officials who contribute their forecasts, who felt that there was upside risk to inflation. That number went from just 3 in September, which was the last time they released their summary of economic projections, to 15 out of 19. In other words, almost everybody. And I think I can't entirely see why inflation should go up, but I think it is a major risk. And so that's the cherry on the top of a peak in the market. If all of a sudden we're not talking about the Fed cutting rates anymore, maybe even talking about them tightening.
Just follow up, if you expect the US markets to top, where would smart money go? Would it come to EMs, and what would be the pecking order in EMs?
Well, it depends on why it would peak. I think it would probably go more into I'm not exactly sure. I think it would go into cash, to be honest, in the beginning, just to figure out what the lay of the land is. But emerging markets, I doubt they would be first on the list of things people would look to when they are de-risking into a rising rate environment.
And maybe one of those reasons is because we don't know what's really happening with all these tariff wars and what direction US policy will take, which emerging market will get penalized and how, right? Mark, hi, and season's greetings to you. So on that, so we have to watch out for, obviously, as you said, the direction of inflation in the US. The rate cut expectations have been tempered. Now, when Trump takes office, what are the key things that you'll watch? And, how important is it going to be for markets? What should we track once the market comes back in January, post-New Year?
Well, lots of things. Whether they'll be able to cut or extend taxes, cut taxes or extend the existing tax breaks, whether they'll be able to deregulate major sectors of the economy, whether they can cut excess spending in the federal government. Of course, relations with neighbors, principally Mexico and Canada, where they've threatened 25% tariffs on both, relations with China. So many different moving parts. If I may say, in general, I think they will be able to do some of what they've said, but if I had to put a number on it, maybe 20%. It's not so easy to do these things. But the net effect, I believe, would be accretive to US GDP growth and therefore indirectly inflation.
Mark, hi. Are you of the opinion that the Indian equity markets too are topping out?
Well, if the U.S. goes into a bear market, I can't really recall previous instances where India didn't go down as well. So in a major, in excess of 20% fall in the U.S. market, I sincerely doubt the Indian market would be able to withstand that. I'd like to just say that we're not saying that the top is in, but we're saying that there's a process that we think is unfolding where top is coming. And we don't like to sell before the top, so we're fully invested, but we are foreseeing an occasion, some point next year, where the market will have a sizable correction. And when I'm talking sizable, I'm talking in excess of 20%. India would go down too.
That's a big call, Mark. I mean, that one that's going to stand out in our minds for sure. Let me just ask you, why do you feel that the US could correct by 20%? I take the point on inflation, but if growth continues to be as strong as it did, I mean, there's no recession in sight, right? Early 2024, everybody was worried about recession. Look at it now, 3.1% GDP print, the last GDP. So if growth remains so strong, then will equities really sell off in this fashion?
Well, you know, what I'd say is that in my little career, what I've noticed is recessions are impossible to predict. The economists who predict them are just lucky, that's all. And you can look at so many studies to show that. Hardly any of the recessions that have happened were called for by the majority of economists within a year prior to them happening. So as much as Trump is pro-growth, which he is, I could give you several examples from Grover Cleveland to George Bush Sr. of other pro-growth, pro-market presidents who came into office and there was a recession. That's the nature of recessions. They're very difficult. There's so many, you know, there's millions of moving parts in the economy. So forecasting them is, I think, practically impossible. So now that I've said that, I'll also say that the other problem with the U.S. is that it's gone up 60% in the last 2 years. And so it's expensive. It has only been this expensive twice in the past. And that makes it vulnerable to a correction.
Okay. Well, point taken, Mark. For starters, the conference board data was not very good. So there are, small red flags here and there. I know Mark is not giving us very good news, but over the year end, it's always good to be warned of what can happen. That also is a Christmas gift. Thank you very much, Mark, and I hope you have a brilliant 2025.
Thank you.